Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, July 5th, 2023, and this is Blockhead Traders Weekly. In this week's episode, I am not flying solo this week. I am joined by Viper XL 007, and we have a few different topics to bring to you this week. They are all centered around this thing called an ETF, which stands for an exchange traded fund. And we're going to kind of dabble just a little bit in the, talking about what an ETF is, how you can look it up, what are some things about it. The cool thing is there is probably an ETF that is your flavor. There are a plethora of these out there on the market, and even crypto ETFs, which is what we're going to really zoom in on as we get into this episode, because there's a lot of news out there around crypto ETFs and the SEC, and they're trying to break through, and you might go Google a little bit about it and say, wait a minute, but there's already Bitcoin ETFs out there. What's the deal? So that is what we're going to cover in this week's episode. But before we hop to that, I want to give a shout out to our Discord, a link in the description below. You can hop in there, say hello to myself, Viper, or some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you're interested in, and we will put it on this show. You will also find a link to thetagang.com/sprocket888, where I post each and every one of my equity trades, the good, the bad, and the ugly. Lastly, this is available wherever you get your podcast, so you can listen to this on your commute to and from work in an audio-only format. And if you can't find us on wherever you pick up your podcast, let us know and we will get it there. But let's hop to this week's content, Viper. ETFs, exchange-traded funds. And just speaking at a high level on what an ETF is, think of it like you might have heard about different investment clubs where a bunch of people kind of pool their money together with some type of strategy, and they have meetings and they say, we think we should buy Amazon. We think we should buy Google. And they talk about what percentage of their portfolio they're going to put forward to that particular strategy and things like that. Well, think of an ETF a lot like that investment club, but not so much where you get to have a say in the money, but that the ETF itself or the club you're joining already has a predefined strategy that they want to march forward with. And that strategy could be something as simple as, our investment fund is intended to track the SPY index, the S&P 500. The ETF could be focused on small cap tech stocks that are looking to break out. Or it could be something like, this is green energy ETF, where they invest in companies that meet a certain criteria for green energy or green contribution. Anyway, there's essentially a flavor out there of every type of ETF. And one thing when you're kind of searching through these ETFs, your broker will have all kinds of screeners on how to filter for different returns, different categories, stuff like that. You'll find a large amount of information on the internet when you want to say, find me a green energy ETF. And there will probably be a listing of a dozen or so different ETFs that focus on green energy. One thing that all of these ETFs are going to have in common is they have a thing called a prospectus. So remember, I mentioned a little bit about this investment club and what are they striving to do, what are their goals, and what's their strategy to achieve those goals. In that prospectus will be exactly that. They will talk about all their disclosure on, this is what we charge you to be a member of our club, because these ETFs are not free. Some of them are higher expenses than others. And they will talk about what their objective is. Like I said, maybe it's to track the S&P. Maybe it is to promote green energy adoption by investing in companies that have a good green footprint or something like that. And that prospectus will talk about that objective, that high-level statement of what they want to do. then they'll kind of also call out, hey, who are the people involved in managing this money? So you can kind of look them up on LinkedIn or whatever your resume is, their resume is, to find out what type of funds have they managed in the past? How is their performance on those? And then they'll usually call out their particular strategy on that. And think of it like a summary due diligence of what exactly it is that they intend to do. And that's really, you'll see a lot of ETFs in retirement accounts. Retail investors kind of like them because they're a way to get diversified without really putting in a lot of the work to diversify yourself. So, for example, if I want an ETF, I want exposure to the retail space. There is a multitude of retail ETFs which dabble in all of the big retail players, right? So I don't have to go and say, well, I want to buy Abercrombie, I want to buy Kohl's, I want to buy Target. And I don't have to divide up all that allocation. I can simply look for an ETF that will diversify itself amongst the retail sector. And then maybe I want to buy another ETF that's more focused on the tech sector. And I can then build my own portfolio diversification amongst ETFs. So it's kind of like a shortcut to that. Viper, I don't know if you have anything to add on the broad scope of ETFs, or if you have traded much in them in your own portfolio or experience on them.
So I think one obvious point of clarification, if it's not clear, is when we're talking about these ETFs and things like that, we're definitely talking more of the investor mindset as opposed to trader mentality, like we've talked about before. So this is where it opens up a whole new realm of due diligence, exactly like you were saying, where you want to dig into these prospectus documents and you want to see historical performance from these asset managers rather than reading a chart of, where's the buy-in on the chart. And I haven't dabbled in a while, although I guess it's not entirely true because everybody that watches the show knows that I'm buying in on regular intervals to the VTI and the VOO ETFs, which are Vanguard managed funds. But aside from those, I did dabble way back, in my early days before I knew anything about anything. I don't think it was Robinhood, but there was another trading app that really tried to differentiate itself with robo trading, and essentially they created ETFs, for their users, and it was very heavily marketed, exactly like you were saying, like green energy and retail and tech, and they would try to do, some trendy groupings and things like that. So that was probably the last time I dabbled with it, but I didn't that was so early in my journey that I didn't stick around to, I was like, oh, this is cool. Oh, it's not doing anything. I'm out of here. And that was mostly just not understanding the vehicle beyond the marketing of like, oh, I'm going to invest in all the tech companies. And then, so that part was understandable, but the part that wasn't understandable was that long time horizon, the fact that this is a long-term investment. It's, this isn't some moonshot kind of thing, or rapid return situation. I mean, if it is, it's a market fluctuation sort of event. So I haven't dealt with them too much, but curious as we get a little deeper here and start to explore the situation with the crypto and Bitcoin ETFs that are popping up and what the future of those hold.
Yeah. I'm similar to you. I don't have a ton in ETF world. I do have some in my HSA account. That's predominantly where I have ETFs. In my retirement accounts, I typically go towards the mutual fund side of things, which is very similar to an ETF with some nuances that they're bought and sold, but mutual funds are basically traded after hours. So you kind of put in your order for them and they fill after hours, and they're not traded on an exchange like an ETF, which trades like an equity live during market hours. So jumping here, though, to the ETF flavors, the big buzzword lately is crypto ETF and SEC and and SEC and crypto everything. And so there's been a couple of big boys that have been submitting ETFs to Bitcoin ETFs to the SEC, and that's grabbing a lot of news headlines because, as you know, just a little bit ago, the SEC really started cracking down on some of these centralized crypto exchanges like Coinbase and Binance. And if you read the headlines, they'll say, there is no Bitcoin ETF out there in the market today. This is going to be revolutionary, which is true from the context that they're referring to. But if you go look for Bitcoin ETFs today, you'll actually find some. And the key distinction here that I think we want to chat just briefly about before we hop into some of that detail is what is not available within the U.S. market is what's known as a SPOT ETF. Most of the ETFs, all of the ETFs that are out there and available in the U.S. market are basically backed by Bitcoin futures. Futures is a different type of product that exists, and in the futures there are Bitcoin futures, there are Ethereum futures, and those funds that exist today, when they trade, they pool the money, they trade it on those futures. A spot ETF will actually buy and sell the Bitcoin itself as part of their strategy, and that has not been done in the U.S. But we're starting to dabble into the crypto land, and so I know, Viper, that's more your realm of knowledge and something you have been looking into. So talk to us a little bit about these Bitcoin ETFs and recent headlines.
Yeah, I mean, like you said, the big thing is it's one of those news events, hype news events that, causes all kinds of narratives and whatnot floating around. And like we always say, there's an element of truth to most of them, and the size of that element is variable depending on the topic. And so in this case, people are super excited for a spot Bitcoin ETF because, like you said, it directly deals in the underlying asset itself. So you issue a buy on a spot ETF of BTC, and it will go, and that will translate to a real world buy of Bitcoin, and thus impacting price of the price of Bitcoin. So in the crypto world, that's where a lot of people's excitement and hype is driven is, oh my gosh, can you imagine if TD Ameritrade or E-Trade or any of these, list an actual spot ETF, or BlackRock or somebody gets approved to offer a spot ETF, because that just opens up the world of Bitcoin, specifically the world of Bitcoin, to the markets, the U.S. NASDAQ, the U.S. financial markets. And so there's obviously a lot of hype around what happens when trillions, or whatever the size of the U.S. market is, are enabled to purchase Bitcoin without touching the blockchain. And so the seed of truth is that is a thing, that it could impact price. How much though? Who knows? But that's where a lot of the excitement from the spot ETF comes from. And I think it's interesting. And then, like you said, as I've looked into this, because there's already ETFs out there, and there was big news, at least in certain circles, about the recent Bitcoin ETF that was approved. The company behind it is called Volatility Shares. They are the managers of it, and they recently got approved as of just a few days ago, I think, within the past week. And they started trading, and there was a whole bunch of this Bitcoin ETF got approved. But like we were saying, this is not a spot ETF. There are several spot ETFs that have been filed, but none have been approved. I think one notable one, I don't remember if it was BlackRock or if it was somebody else, but it got rejected, and then they refiled, having supposedly fixed whatever was complained about. So the one that was approved is a 2x leverage ETF on Bitcoin trading and Bitcoin futures. So we'll take a little deeper look at that in a minute. But I mean, it seems like we're headed towards a path where this is going to happen. The spot ETF. It's just a matter of when one of these filings appeases whatever the SEC is looking for. We obviously know the SEC's view of Bitcoin is pretty favorable from all of the contextual details that they've given up to this point. And we also have seen significantly over time that BlackRock and major financial institutions have been buying a bunch of Bitcoin, presumably in preparation for offering and being, enabling buying and selling of that asset. So it'll be interesting to see where we go when it happens, but it definitely feels like we're on a path where the spot ETF will happen, and then you'll be able to buy at least Bitcoin without touching a blockchain, which sounds pretty interesting.
Yeah, it sure does. And to call your attention to, well, how does this line up to the SEC and the crypto attacks that they have going? And remember, in those things, they're going after Coinbase and Binance for buying and selling and facilitating the trading of what they consider securities that were not properly registered. So go back, watch our episode on the Howey test, and you'll see in that episode that the Bitcoin actually fully passes the Howey test as not a security. And so an ETF that simply buys and sells Bitcoin would not be part of this target that the SEC is kind of going after with these unregistered securities. And the act that BlackRock and others are going through to register the ETF is exactly the thing that the SEC believes some of these other tokens should have gone through before they started buying and selling.
Yeah. And purely, I always, say putting my hard hat on or whatever, when I'm really speaking out of not being an expert in a particular area. But I feel like, because there is this idea, and maybe I'll dig into this a little bit more to have a little more grounded and factual response, but there's a lot of people that are like, well, you're letting all these leveraged, ETFs go through, but you're being so hard on the spot ETFs. Like, what the heck? What gives? And I mean, I'm not going to claim that I have an answer right now. That's part of what maybe I should have researched a little bit before saying this right now. But I feel like, given the SEC's approach and, like you said, how they're cracking down on those centralized exchanges, and we need to continue to, first of all, ignore the noise and the FUD and just everything that everybody's talking about. Really focus on what they're doing, which I believe we did in that episode, as far as going after centralized exchanges specifically for their solvency and through the lens of the SEC's role in protecting investors and all that kind of stuff. So I say that to say that somewhere in there, I feel like the leveraged futures ETFs are, I don't want to say safer, but when it comes to the spot ETF and you actually have to have the one-to-one asset backing, that's something that the SEC needs to be much more careful about to avoid any insolvency risks for the investors on the market. And I believe, without doing proper research, that it ties into something like that as to why the spot ETF is so much more delayed than all of these leveraged futures offerings.
So speaking of leveraged futures, let's switch over to this 2x leveraged ETF that you're talking about, and I'll let you kind of talk through it. But I pull up your screen here, and I think it's important to kind of start it. What the heck are we looking at here? Because this is the type of thing that I believe all of our listeners and viewers should be able to do within their own brokerage account to pull this type of information.
Yeah. So in your brokerage, wherever you are, I mean, this is the BITX index or ticker. So it should be offered in any brokerage. We're particularly looking at TD Ameritrade, of course. And this is the ETF we were talking about, where it is a 2x leveraged Bitcoin strategy ETF. And we can see here that it's currently trading at $15.04. So obviously the value of, there's no particular value derived from Bitcoin itself for this price, because obviously those are very different numbers. But we can see here part of that due diligence that Sprocket was talking about is right underneath this, at least in the case of TD Ameritrade, we have this prospectus hanging out here. And on whatever your brokerage is, they have it available somewhere. Obviously, you can even search and go to the fund manager's website and get it from there too. But I do believe every brokerage needs to make this readily available as part of that investor information. So if we go into it, we can see over here, this is the volatility shares is the name of the fund manager. And we're obviously not going to read through this, but this is the document that, and it's really not terrible. Like just real quick, if we jump to the bottom here, it's 13, 16 pages long. So it's not as dry and bad as it sounds when you hear prospectus. But it is highly important. And some of the interesting things that we have here are things like the operating expenses for the fund. When you buy this, what is happening with the fund under the hood? And there's obviously these management fees and other fees that can be tacked up that you need to be aware of, because when you buy it, you're now paying and contributing to these fees. So we can see here this management fee on this one rings in at 1.85%. And that doesn't sound like a lot. It sounds like maybe a lot. But depending on, what kind of like trading fees, we're used to 0%. What are options? What in the world of options, what do those fees usually go for?
It's by contract, and I think it is something like $1.60 a contract to buy and sell. So, it's not a fixed percentage based on that. It's just that is the contract fee.
So there are vehicles out there that you're familiar with fees and whatnot. In this case, 1.85%. Now, by comparison to another ETF, if we pull up the VTI prospectus, which is the one that I always talk about, the Vanguard Total Market ETF, we can look over here, and you can use, there's various fees described as to, if there's any fees on transactions or purchases, and obviously there's none there. But all of a sudden we look here, and we're seeing a management fee of 0.03% versus 1.85%. So what the heck gives with that?
Yeah, so the 1.85% on an ETF is an extremely high management fee. A lot of times your ETFs probably, there's a distinction between what's known as actively managed and passively managed. So every ETF is managed. So there's somebody looking over it, and in this prospectus will be who's managing it, what group of people, what's their role, what do they do. There's an introduction in that. And the difference is, as a passive management is typically something that will take care and allocate the funds, but not on a daily during the market hours basis. Whereas an actively managed fund, typically the managers or manager of that fund will buy and sell according to a strategy during hours, like an active trader. And a lot of times, because you're going to have these really expensive money managers, traders overseeing it, they bake a lot of that cost of an overhead of having that into the management fee of the fund. Whereas, say, the passive management fees are more like, hey, we're going to try to track the S&P, and we know that the S&P is comprised of this percentage of this company, this percentage of this company. So maybe once a day they programmatically go in and buy and sell and reweight their portfolio to whatever holdings based on price action and stuff of that day is more of the passive management. Generally, passively managed funds are usually under 0.5% management fee. And then the actively managed ones are usually over 0.5%. Like I said, 1.8% management fee is pretty stinking high for an ETF.
Yeah. And it looks like as far as, why that could be the case. I mean, beyond what you just said, as far as actively managed and needing to essentially pay for somebody to manage that. There's certainly more information to be gleaned here. Like, nothing should be taken as like, oh, I guess that's what it is, or like, they're not going to explicitly lay out why it's 1.85%. But as you continue to read through this prospectus on the 2x Bitcoin ETF, like, we can start to get a general idea of perhaps why, because in this important information about the fund, it clearly lays out the goals of the fund, and the goals of the fund are to have a performance that corresponds to 2 times the return of the S&P CME Bitcoin Futures Daily Roll Index for a single day, not for any other period. And so, to me, that says that not only is this actively managed, but it is closely and on a daily basis actively managed, because their entire fund goal is to outperform by a rate of 2x on a 1 day period, not on any other, like, if it's maybe less actively monitored or managed, maybe it's like, well, this month we're going to pull off, but this is 1 day. They want to outperform the futures daily roll index by 2x. And so, at least to me, that sounds like that's pretty heavily managed to try to achieve that.
Yeah, and right here is telling you exactly how they achieve that, and that is through the management of it. In your other prospectus, there's a section, I'm sure, that talks about how they achieve their strategy, and it's probably based on some type of sampling of the different things on there, and that's really the type of stuff you're going to get out of this prospectus. Is you're going to be able to read through it and kind of understand. Okay, it's not going to be fully transparent on exactly when X happens, what we do Y. But they're going to give you more clear information about how they're going to do this, whether or not it's going to be, this is up to the discretion of the manager, which is what some of these things say, which is where you're basically putting your money behind that guy's performance and achieving the goals. And do you believe that? But yeah, maybe we can take a look at how this thing, it's only been out there for a few days now, but let's does this thing really hit its magic mark of 2x leverage?
Yeah. Let's check it out. And before we jump into there, like, that's the other part of this. Like, yes, there are some things that they're not going to tell you every bit of the secret sauce, but they're performing, and they have, you as the investor need to hold them to performance metrics. And that can be done simply by looking at the chart here. So we jump into the chart here, and we have on the top, we have the futures 2x leverage ETF, the chart of that. And on the bottom, we have the BTC USD chart. So the price of Bitcoin as traded on Coinbase. And really what we're going to be looking for here is, first of all, are you even trading at this, in the same pattern as the underlying, as Bitcoin? Because that could be really concerning right off the bat, and to some degree, if Bitcoin's tanking and the ETF is flying off the chart, like, then you're doing something that you're not supposed to be doing. But the real power here is, this is supposed to be 2x the performance, and so we can pretty easily start to glean that when we take a look over here. We change our axes values here to be percentage change instead of the raw value, because, like we said, the ETF is trading at $15. Bitcoin is trading at $30,000. So there's not a lot of correlation there, but this is leverage. They promised a 2x performance. So if we look at percentages, now all of a sudden we can start to get a better idea, and we can dive into this. Like, how does it perform on, let's say, this dip here, just going from this candle on June 29th at market open, and let's go to the bottom of this wick here on this big candle the next day on market open. We can see that the ETF performed at a negative 9.69% roughly between this time span. And we can come down here to the actual price of Bitcoin, and lo and behold, we see that Bitcoin itself performed negative 4.64%. So that's pretty doggone accurate, especially because I'm just kind of roughly drawing these boxes in here. So there's some margin of error on my end as well. And we can keep measuring here, and we can see that this drawdown here was negative 6.46%, while Bitcoin's price actually dropped 3.08%. So we're still pegging it pretty well. And then because, we'll talk about some green days as well, there was an upswing here of 7.33% on the 2x leverage ETF, and the underlying went up 4.2% roughly. So far, in the very, very limited, like that's it. That's the entire history we have. This started trading on June 27th. We are currently on July 5th. But so far, they're doing what they said they would do. They're trading with 2x leverage to get 2x the performance, and that is negative or positive performance in this particular case. And this is kind of one way that you can double check and make sure that it's doing what they said it would do. If it deviates from this and you're invested in it, like that's a red flag. That's something you should be concerned about. If it's doing what they said it was going to do, then, that's what you choose or not choose to invest in. And that was Friday 3rd to June. Yeah. So I actually wasn't entirely, they're actually, I would say, outperforming because they did clearly promise one day, that it was the performance of one day. And some of these boxes here, I'm actually dragging it beyond one day, which is beyond the window they promised. So, I suppose that's potentially good management there, that it's out, it's holding up beyond the window they were targeting.
Yeah, and the one thing I might call out here a little bit, and this kind of goes back to hey, there's a flavor for everything. I know earlier when we were talking about ETFs and how I typically deploy them and how you might do it for diversification, and we said, oh, that's much more investment horizon stuff. I could easily see this particular product to be used a little bit more in a trading phenomenon. So, if you're looking to catch a move in Bitcoin and you want to basically double down on it, whereas it's a double-edged sword. It's returning 2x of Bitcoin. So if Bitcoin drops, 5%, you would expect this double leverage to drop 10%. So, this might be a tool in the toolbox there for you if you want to grab a, ride up or a short on this ETF where, maybe that's a little bit more of a trading type move versus an investing move, since a lot of this fund is really targeted at the 1 day movement of Bitcoin. So Viper, you're kind of looking at this, and I don't think you typically look at Bitcoin stuff when it comes to price action and stuff. I mean, I guess you look at it, but I've never really heard you much about saying, hey, I just bought, 7,000ths of a Bitcoin today. Let's see what happens, right? I've seen you trade other tokens and stuff, but what do you think of some of these ETFs? Is this something you kind of plan to dabble in or anything like that?
Yeah, I think so. Because what's interesting is as we were preparing for this episode, the idea was I wanted to get back, any diehard viewer that we have out there might be like, what the heck, guys? I'm trying to pay attention to your 1% plays and I haven't heard anything of that in like 3 months. So preparing for this episode, I was like, you know what? Like that might be a cool thing to explore, as this 2x leveraged ETF as a 1% trade. And when today started, because today was the day that I was going to really dig into it, possibly put on a play on it. And then I, started looking into it. I was like, I don't know if I really want to do that. It's like, to me, it has low volume comparatively to other products in the market. And I didn't do the deep dive, into some of the performance things. And initially at the outset of the day, I was like, it's so low volume. Like, I don't think I want to mess with it. But then as we kind of dug into it and we did confirm the performance is doing what it's supposed to do, that it's getting 2x the return plus or negative. I actually started thinking, okay, maybe I'll dabble around with it. And then I, had, take things to one step further for the viewers, for the show research. And I think what I'm going to do is I'm going to actually do, I think, 3 simultaneous plays. And this is just kind of, I don't know. I mean, it feels like testing out the performance or whatnot, but our 1% plays are generally around $100 in size. So I'm going to enter $100 in BITX here. And at the same exact time, I'm going to just spot buy $100 of Bitcoin on chain, wherever. And then I'm thinking the third one might be, because we have loosely talked about various DeFi protocols and ways that you can earn a passive yield on crypto assets or things like that. So then the third one, I'm going to do another $100 buy of Bitcoin, but then I'm going to pick a particular DeFi protocol to essentially stake or lend, or I don't know exactly which one I'm going to do yet, but put that one basically to work. And so we'll kind of have a three compare points of just straight up 2x ETF, straight up buy. And so now those two compared, we're actually comparing the performance of the ETF to make sure after X period of time, did they outperform as they said. And then the third one is just kind of tying it all into any DeFi products that we've talked about, just as far as if you're going to hold it, what are your options to hold it and how does that perform? So I think I'm going to go that route, do those 3 things. And the intent, I think, is just to do this just hold these long term. I mean, I'm thinking 3, 4, 5 months, maybe, just to see how they perform averaged out over time.
Well, that brings us to the end of this week's episode. Like I said, hopefully this might entice your curiosity to explore the world of ETFs. There really is an ETF out there for everything that you might want. And so Google is your friend when you kind of go through that to try to find the ETF that fits your personality, your flavor, your investment strategy. I am confident you will find one. I typically don't dabble in a lot of ETFs, but it is a very interesting thing because it really is a multitude of products out there that kind of someone else is mixing and matching things together to offer you something new. I view it very similar to, sure, I can go to the grocery store and I can buy a bunch of ingredients and maybe I can cook up a delicious dinner, but, that might take work. It might take a little bit of experience and things like that. Or I can go down to a restaurant that, has good reviews, has a good chef, knows how to prepare the ingredients, knows how to put that stuff together. And do I pay a premium for that? Yes, I pay a premium for that. But there's a little bit of consistency, regularity, expectations, things like that. That's a loose analogy to kind of the world of these ETFs where you are paying a fee. However, someone else is putting together the product for you, managing the product for you, and you kind of just join the club by pooling your resources with other investors to fund that particular exchange traded fund. And so, I encourage you to go out there, look at that. And maybe that is the type of trading and investing that you're interested in. And it's not all, socking away for 20, 30 years from now. As you can see, this 2x leverage Bitcoin, I think very much could be used on a daily basis to try to capture these moves in Bitcoin without actually going into the futures world where you can trade the Bitcoin futures that are just astronomical in size and out of reach of retail investor. I mean, we're talking hundreds of thousands of dollars in notional value. This is, a $15 underlying that you can buy and sell in your Robinhood account, and it does match the performance of Bitcoin for that day. So encourage you to go out there, check them out, look for things that interest you, dabble in them, try the paper trading, read the prospectus, do your investigation on your due diligence, have a lot of fun looking them up. And remember, think outside the block.